It's tax season now. This week's Lewis on the Law, I've got another great show for you. I have attorney Alyssa, Maloof, Whatley, and we're going to take apart the new tax law, deduction by deduction. So get out your receipts, and we're about to get into it.
Welcome to Lewis on the Law.
You are listening to Lewis on the Law, and I have another great show for you guys this week. We're going to talk the new federal tax law, how it affects you and your personal income taxes, and we're going to talk a little bit about how this government shutdown is going to affect you and your taxes. I feel great. I have attorney Alyssa, Maloof, Whatley, and she is a three-peat. You're probably my first three-peat on this show. I've got a lot of repeats, but you're like the first three-peat. Do you feel honored?
Yeah, that's awesome.
Now, Alyssa, can you tell them a little bit of contact information for you and your law firm and what you guys do?
Yes, so I'm a local tax attorney. You can reach me via my website at www.atltaxlawyers.com. Reach me by phone at 404-551-5838 or shoot me an email at alyssa@whatleytaxlaw.com.
Excellent. So we have got this terrible situation going on right now. The government is shut down. Nothing's going through. Is this going to affect my taxes and my filing of my taxes?
So, yeah, I mean, they're saying that it's not going to affect, but it's already having an impact. And so I think the first thing that people need to realize is just because the government is shut down doesn't mean the tax laws are not in effect. They are totally in effect. If you were supposed to make estimated tax payments, you should have already made them for the January payment. So just because the government shut down doesn't, release any of your tax obligations, right? So you should
Wait a minute. Because the government shut down, because they're slack, I can't be slack too and not file when I feel like it?
Unfortunately not. And you know what? Well, what they're doing is, so they've ceased all operations that are considered non-core functions. So anything that is a core function, they are still going to do. And so core functions would be processing returns, and they're saying that they're going to issue refunds. It's not necessarily that the problem is that they're not going to be able to issue the refunds. It's that there's nobody there to help you, right? So let's say you have a question about the new tax law, or you have an issue with your account, or you're not able to e-file and it's not accepting a return. When you go to call the helpline, guess what message you get?
What message do you get? I dread this already.
Oh, it's just some generic message. And it's like, please take notice that live customer assistance is not available during the government shutdown. We will return, operations will resume as normal, to be determined. And you're like, great, but I need to speak to someone. So I think the fact that we have a new tax law and we're going into tax season late, where they're going to start opening everything up on January 28th. They're going to start accepting electronic returns, and they're having a skeleton staff. I think that is going to create some issues. It's probably going to delay processing times, which are normally, for regular current year returns are pretty fast.
Usually a couple of weeks, right?
Yeah. Amended returns, late returns.
Yeah.
Those can take up, amended returns can take up to 16 weeks.
Yeah.
So, I think when they get back and working with the skeleton crew, we're going to see delays. And obviously there's going to be a lot of work that's not being done. So just for example, I do a lot of audits, taxpayer collection defense, helping them set up payment plans, doing those types of things. I'm not actually able to do any of those things right now. So for example, any audits that I've had, they're not in the office. Their fax machines are closed off. I've tried to fax numerous documents because I have a bunch of deadlines. Faxes are off. You can't even send it. So I couldn't even meet the deadlines that they were asking us to meet because they've completely turned the fax lines off. They're not answering their phones. Revenue officer meetings, the agents just aren't showing up, and they're not supposed to.
Yeah, that's a killer. If you're trying to set up a payment plan and you have no one to set it up with, how does that happen?
Right.
It doesn't, huh?
Yeah, so it doesn't happen. And I think one of, ACS collections, which for everyone out there, I always forget that James was in the clinic, so I just assume everyone knows.
Everyone here is a tax expert.
Everyone's a tax expert. But automated collections.
Actually, I'm way behind on my game. I've had like you, Brian, and Lucy on, and you guys have all way surpassed me. It's been I do nothing but leases and clear title actions, and my tax game is way off.
Hey, that's important stuff too.
I do my own taxes, and that's about it.
Well, if you need any assistance this year, it might, like I said, it might be difficult to get anyone on the line. But yeah, I mean, it's just really frustrating when you need help. And I think that's what's going to happen because this new tax law, there's new forms, there's new rules, there's new regulations, there's new code. There's just going to be some issues and there's not going to be any assistance. And I think that's what's ultimately going to cause the delay. But for other taxpayers out there, they are continuing automated collections.
Of course, they're always collecting.
Right? So that's not stopped. But then you don't have anyone to talk to resolve the case. So my clients are still getting the automated letters, which is really frustrating. And I think
the interest is still accruing.
Oh, the interest and penalties, just every day, compounding daily. It's awesome. But I think one of the things that really upset me was just to give people an example of how it affects taxpayers. I have an older woman with a Social Security levy. That's her only source of income, or her main source of income. And now she has Social Security levy. And normally what we would do if the government's open, we would call the government and give them a detailed list of her income and her expenses and show that she can't afford to pay them, right? And that them taking this levy causes her a financial hardship. The problem here is there's no one to talk to, and I cannot get this levy off until they return back into the office. And so her check will keep getting levied until they return. And there's nothing we can do about that.
That is horrible.
It's horrible.
So I want to hear you forecast a little bit. How long is this going to last?
Oh my gosh, I can't even. I feel like I'm not even in the right position to do that.
Mm-hmm.
For some reason, I think they just keep going to the next holiday, right? So like December, they're like, oh, we'll just wait and we'll throw it to New Year's, and I'm like, oh, now we'll just throw it to MLK Day, So I'm really hoping it ends soon because obviously I'm not allowed to accomplish anything for my clients, and I really think it's just in the end going to cause a pileup of work for them and delay everything, which for some of my clients, they're really happy about. The ones that owe a couple million, I'm sure they're very happy that the revenue officers aren't showing up to their meetings.
Right.
They're not complaining about that. But for other people that are facing a hardship that may need assistance immediately and not able to get that assistance, I think that's pretty hard. So we're hoping that it ends soon.
Wow. Are there any other ways that this is affecting people? I mean, you said the tax returns they're accepting tax returns on the 28th. Is that normal?
They're going to open that up. Yeah, they normally begin tax season sooner than that.
Yeah, I thought it was always like the 15th or something like that.
Yeah, so they're starting slightly later, but they're also not bringing back a full staff.
Mm-hmm.
They're only bringing in
essential personnel
personnel, so that we're not bringing back any of the other departments. So, and I don't know when they bring back essential personnel, if that will mean live customer assistance, which I think that is the problem. When people file returns, a lot of times their returns aren't accepted, right? They'll get rejected. And so they need to call and find out, oh, why was it rejected or what's the issue? Many people have identity theft, right? And in order to file your return, if you have identity theft, you need that PIN number.
Yeah.
And so sometimes people have a hard time getting that, and then they have to mail that back out to you if you missed the first letter. And by the way, those are being sent out. So if you get your identity theft PIN letter, make sure you use it to prepare your return so your return doesn't get rejected and you can e-file.
Okay, so wait a minute. Clarify that a little bit. An identity theft PIN number? You get a PIN number for identity theft?
Yeah, so identity theft, in the world that we live in.
And it's happening a lot these days.
It's really unfortunate. What people will do is they'll file fake tax returns and get these huge refunds and send them off to a different place, and then they end up getting the refund. The taxpayer ends up getting screwed because it messes up their account, and then they have to go back and file an original return. But a lot of times you'll notice an identity theft issue when there's like the wrong number of people in the household, like children or dependents. So they're like, that's not me. The addresses are wrong. Maybe the income is way off than what was reported to the IRS. And so those just create kind of it's just frustrating experience for the taxpayer because they have to go through the identity theft protection unit. And you have to.
Wait a minute, a frustrating experience dealing with the IRS? Do you guys believe that?
Let me say more frustrating.
Okay.
And there's a lot of steps that you have to go through to resolve identity theft. Like a lot of times they want you to go out and get a police report, and then you have to send copies of your IDs and a bunch of verification of your identity and all of those things. But once that happens, then every year what they do is they'll send you a PIN number. So that you can file electronically moving forward. And so it changes every year, and I believe they'll only send it by mail.
Yeah, okay.
Just to keep it super secure.
That's accurate. Yeah, that makes sense.
So I just got like 15 of them for a bunch of different clients, so I have to scan them in and send them out. Say, please use your PIN number, because inevitably, what will happen. People are like, I can't file my return. It's like, because you need the PIN number.
Yeah, that makes sense.
But I can see where that might be frustrating for people. Like maybe they didn't get the letter and they need to call the IRS and say, I didn't get the letter. There's not going to be anyone there to answer the phone.
Yeah, there's a lot of frustration in dealing with the IRS. We won't get into that. When we come back, we'll get into the new tax code, how it's going to affect us on our personal taxes. But Alyssa, before we leave for this section, go ahead and one more time give them some contact information for you.
Yep. You can reach me on my website at www.atltaxlawyers.com via phone 404-551-5838 or email me directly at alyssa@whatleytaxlaw.com.
You're listening to Lewis on the Law. My name is James Lewis, and I'm your host this week and every week. And the goal of this show is to empower you, the listener, with legal information. This show is not designed to replace the advice of an attorney. If you have a serious legal issue, go ahead and contract with an attorney. You can always contact me, and I know a lot of you guys have been contacting me. Just drop me a line if you need an attorney. If I can't help you with your legal issue, I can direct you to an attorney who will be able to help you. A lot of them come on my show. A lot of them have been here before. And we'll try and get you pointed in the right direction. You're listening to Lewis on the Law. Before I have any more vocal meltdowns, we'll take a break right here. You are listening to Lewis on the Law, and I've got this guitar tie pin in honor of Jimi Hendrix, but I really need like a $ tie pin for these like tax shows and financial shows we do. You're listening to Lewis on the Law. I have, once again, another great show for you guys. I am talking with Alyssa Maloof Whatley, and we are talking the new federal tax law. Before the last segment, we got a little bit into how the government shutdown is affecting us. Now we're going to get into how the new federal tax law is affecting our personal income taxes.
Yes, I'm really excited about the new tax law because I do think
it's so crazy when I hear attorneys say, "I'm so excited about the new tax law."
I'm a little excited, but I think your excitement should depend on what your situation is. Right. So I think we talked about the tax law before last year. There's going to be winners and losers depending on what your situation
There's
is.
always winners and losers.
Right. Yeah. So obviously corporate interest wins in most of the situation, and some individuals will win as well. But we can kind of go over the changes, and then we'll talk about which categories of people might be affected by that, if that works for you.
Okay, that sounds good. Well, let's get started.
Yep. So one of the biggest changes coming with the new tax law is the standard deduction.
Mm-hmm.
So people normally get that really confused, so we'll break it down even if you're a tax expert. The standard deduction is what you get if you don't itemize. So it's just a standard number based on your filing status, right? So if you're single or married filing jointly or head of household, you get a different exemption or deduction based on your filing status, right? Whereas itemize is where you're listing specific expenses that are paid that are allowed to be deducted on Schedule A. And so people are like, which one do I choose? You're always going to choose the one that's obviously the largest.
Mm-hmm.
But the great thing about the new tax law is they actually doubled the standard deduction, right? So for a single person, it used to be around $6,000. It changes every year with inflation. So now that would be around $12,000 for a single person. So it's it's double. And that's going to have a really big impact on single taxpayers that normally don't get that large of a deduction, because maybe they don't own a home, so they can't itemize that, So a double and the standard deduction is going to help them out significantly. Married filing jointly, $24,000. That's a huge number. And just to give you an example, using real life situations, my husband and I normally itemize. We have a home. We pay a lot of state taxes. But now with the
Wait a minute, you have a business too.
And I have a business.
Mm-hmm.
Oh, good times.
Yeah.
But now with the standard deduction, that number is actually higher. So there really is no reason for us to itemize. We don't need to keep, you always want to keep receipts, but there's no reason for us to do the mortgage interest, the state income taxes, the property taxes, all of those things, and charitable donations, because that number doesn't surpass the standard deduction for us. So now it's making our return easier, and it will make a lot of taxpayers' returns easier because that number is a lot higher. Head of household is around $18,000. Again, they adjust for inflation, so that exact dollar amount You can find on irs.gov or when you do your return. So that's a very big deal. Now, the caveat with that is we increased the standard deduction, but we take away the personal exemption, right?
Okay.
So you used to get the standard deduction. You can itemize or do the standard. And then you also get personal exemptions for the amount of people in your household, right? So now we're going to take that away.
So how does that balance out?
Well, for some people, it hurts them, right? So if you maybe had, a married couple and 2 kids, you would have gotten 4 personal exemptions. Now we take those away, and you just have the standard deduction. So again, it's a case-by-case basis. If you had a lot of people in your household, that's probably going to hurt you. If you're single or just a married couple, it's probably not going to affect you as much, right? Like you end up winning in that because you didn't have that many exemptions anyways. So it's a case-by-case basis, and people are just going to have to run the numbers and prepare their returns and see how it affects them. Now,
so wait a minute. I don't know if you know the answer to this question, but because they've doubled the standard deduction, does that translate into an increase in the dollar amount of the deductions, of the individual deductions, if you itemize?
No, they didn't increase those. They actually limited some of the itemized deductions.
Oh, no. The bad news again.
So that's what we're going to talk about. So they did actually limit some of those itemized deductions. And one of the biggest ones I think that is of concern is state and local taxes are now capped at $10,000, right? So, just to get another real life example, sometime I think my husband and I paid like $14,000 just in income, state income tax one year. So I think that was a few years ago. So just imagine now, instead of getting $14,000, and that's just income tax. I'm not even talking about City of Atlanta. Property taxes.
City of Decatur for me.
Right? Then those can range to about $4,000. So now we got $18,000 that normally would be deducted under the old law. Now I only get 10 of that. It's hard cutoff. So it's probably not going to affect people in Georgia as much. You'll notice some difference. Again, you'll want to compare the standard versus the itemized. But people that live in high income tax states like New York, California, those people are going to see a significant impact on the amount of tax that they owe because they kind of used to get a subsidy for living in those states, right? Because they got to deduct all the state income tax and property tax. And now they're not going to be able to do that.
Yeah, $10,000 doesn't seem like a lot.
It's not a lot, especially when you factor in the income and the property and sales tax, all that stuff. So it's not. It kind of really does limit your deductions. The other issues, and they also took away gambling losses and investment. Oh no, gambling losses are still allowed. There's no more.
No, gambling losses, that's funny because I at one time did an offer and compromise for a 85-year-old woman who had like $560,000 of tax liability. And
from gambling?
Yeah, all from gambling.
Yeah,
WTGs, because they report your income, but she did not report her losses.
People always forget about that. If you got gambling income, if you plan on making money gambling, please get a player's card and keep up with your losses. That's the easiest way to do it. But I have that same issue with lots of clients, so it's not the first time. But the issue with that falls under personal miscellaneous itemized deductions. And normally what a lot of people do there is, let's say they're employed, right? They're a W-2 employee. They claim a bunch of business expenses, right? Like unreimbursed employee expenses, right? Like home office, gas, mileage.
I'm gonna claim a lot of business deductions.
But that's not, you're not a W-2 employee. This is just for W-2 employees, right? Unreimbursed employee expenses. They say, I had to spend this money to make money, and my employer did not reimburse me, right? And that was subject to a 2% threshold of your AGI. So that's gone. And so people used to put crazy things on there. That's always like a really big hot ticket audit item. And now it's gone. So people aren't going to be able to put that on there. So that's hobby expenses, fees to fight the IRS, tax preparation fees. That deduction is completely gone.
Wow, completely gone?
Yep. So it's not there anymore. People are going to go. So a lot of my clients, are basing what they were going to withhold based on their previous year's returns, and they had that deduction. I was like, you can't use your old return because that line item is no longer there. and you're not going to
Okay.
be able to deduct that. So that's going to have a pretty big impact. Other changes, alimony is no longer deductible if you get divorced after December 31st of 2018. So if you're getting divorced in 2019, it's no longer deductible, but it's no longer reported as income to the ex either. So I don't know how the IRS is going to keep up with that.
Yeah, how is that going to work? Okay, wait a minute. So let me get that straight. So your alimony, so if I'm paying alimony, it's no longer deducted from my income.
Right. It's no longer a deduction on your taxes.
But is it paid by the incoming or the spouse who's receiving the alimony?
What do you mean?
Is the spouse who's receiving the alimony, does she record that as income, and does she pay?
No longer.
Okay.
So what used to happen is the spouse that was paying it would be able to deduct it, and the spouse that was receiving it is treated as income.
Mhm.
They just wiped all that out.
Oh, so it's just one person paying the taxes on it completely.
Well, yeah,
Okay,
basically.
got it.
And
Well,
so
that's a rough one for all the high-earning husbands or wives who are stuck with alimony.
I think that used to be a good negotiation point, right? Like, maybe you pay her, but you're going to get a deduction on your taxes. That's no longer the case.
I see.
And now it's too late because it's already in effect. So if you're getting divorced now, you can't go back and undo it. Let's see some other ones. Changes in tax brackets obviously have gone significantly down. So that means people are going to be moved down a bracket, which will definitely help them save money, and I think is a great thing.
Okay, wait a minute. Before we get too far in, we're up against another break here. We're actually at the end of this segment. So once more, give them some contact information for you.
Yes, I can be reached on my website at www.atltaxlawyers.com via phone 404-551-5838 or shoot me an email at alyssa@whatleytaxlaw.com.
You're listening to Lewis on the Law. My name is James Lewis, and I am your host this week and every week. You can always contact me at jameslewislegal.com. All my old shows are archived on my website. I think I have to update it, but they'll eventually be archived on my website. Every single show that you hear on this radio program, it'll be there. Go there, jameslewislegal.com. If you have an idea for a show, go ahead and email me. Email me your topic idea on my contact page. You can just drop me a line. You can email me at james@jameslewislegal.com, or you can give me a call at 404-610-0075. This show is not designed to replace the advice of an attorney. This show is only designed to give you information. It's designed to be your first step in your legal solution. If you're faced with a legal problem and you have no idea what to do, where to go, what to look for, that's what this show can help you with. If you have a real serious legal situation, go ahead and contract with an attorney. You can always contact me at my webpage, jameslewislegal.com. Drop me a line, and I may be able to help point you in the right direction. You're listening to Lewis on the Law. When we get back into this next segment, we're going to talk about tax compliance for individuals. You're listening to Lewis on the Law. My name is James Lewis, and I have yet another fun-filled and exciting show. That's right, the law, taxes, it can all be extremely exciting, and it's exciting because I am empowering you, the listener. I have attorney Alyssa Maloof Whatley on with me, and she is going to be a lot smoother than I am while she's talking on the mic. We can't all be smooth all the time. That's the advice Alyssa gave me just now. Alyssa, how are you today?
I'm doing good.
I know we're having fun talking about taxes, right?
Yeah, I always enjoy talking about taxes.
Yeah.
It's a fun thing for me.
Awesome. So before we left, we were talking through the federal tax law change. Can you go ahead and continue? I think I just kind of cut you off there.
Yeah.
We were talking, changes in tax bracket.
So we were talking about itemized deductions, the big changes. Obviously, on this show, we're not going to cover everything that is under the new tax law because it's very voluminous. It would take forever. But just trying to point out some of the highlights.
I have the old tax code, and it's like this for you watchers out there. It's like this thick.
Right. So we're not going to cover everything. Just some things to be aware of that you should maybe think about in preparing your tax returns this year and moving forward to make sure that you're in tax compliance. So itemized deductions obviously have changed a little bit. So we talked about that. We also talked about previously taking away the personal exemption, but we are increasing the child tax credit. So it used to be $1,000.
Okay, well, that's good because you've taken away the personal exemption, so at least you're increasing the child tax credit.
Right. So that goes from $1,000 to $2,000. So that will help individuals that have children. And we're also just made me think of that. They also got rid of the Affordable Care Act penalty for not having health insurance. So people will no longer be penalized for that. A lot of my clients, unfortunately, couldn't afford health insurance. Maybe they have a lot of children. They weren't able to get care through the exchange at an affordable rate, but they made too much money, technically, and should have had insurance. So a lot of times those people get charged a separate tax penalty, so that's no longer in effect. So that's great for people that weren't able to afford that and were getting the penalty. So we're going to shift. That was kind of personal. We're going to talk really quickly about business, even though it's more a personal income tax show, but for your people that are self-employed.
Which there's a lot of them out there.
There's a lot of them out there, including us too.
Yeah.
So the reason I'm excited about the new tax law is the qualified business deduction. So basically what any entity that's a pass-through, so that could be an S-Corp or
LLCs.
LLCs that are treated as a disregarded entity or Schedule C, any of these flow-through entities actually get a 20% deduction called the qualified business deduction, which is great. There are some limitations based on whether or not you're in a service industry. And so lawyers.
We're a service industry?
Yep.
Say it isn't so.
Yeah. So if you're in a certain type of industry, you may not qualify for the QBI once your income reaches a certain threshold. So, for example, service industries, lawyers, if you make more than $315,000 as married.
Oh, well, I don't have to worry about that this year.
Right. As married filing jointly, then the deduction starts to fade out, right? It's like their threshold and it phases out. And so, and there's a little more complex rules if you have multiple entities and all that stuff. But it is a great thing if you're under the threshold. It's a really great thing that you get a 20% deduction. So that will automatically lower your tax rate. And then corporate tax rates, like if you're a C Corp, obviously went to a flat tax of 21%. So that's a huge difference because it used to be graduated. Now everybody's on a flat 21, which is excellent. And so the reason I went over those real quickly is to tie it into Georgia tax. So just because the IRS adopts something and makes it federal law doesn't mean that Georgia adopts it as well. And Georgia's thing is we're not the IRS, and they're not. They make their own rules, and they get to decide what their code is and what laws they adopt. So they don't actually take everything from the new tax law and include it in Georgia. They can pick and choose. So one of the things that they decided or declined to include in Georgia is the 20% deduction for self-employed individuals. So while it's great, you get a 20% deduction for the federal, you'd actually have to add that QBI deduction back into your Georgia income to calculate your Georgia income tax.
Wow, that really sucks.
Yeah, it does
I mean,
really
to put
suck.
it mildly.
So, there's all these little nuances. And again, this show is not to go over everything in tax law because there's no way to do it, but just to bring up some ideas so you can have a educated discussion with your accountant or CPA or whoever you choose to use about how this will affect you, because people aren't aware that it's just not the same income is taxed differently, and there's certain, and that's not the only change. Like, that's just one of the big ones that people are going to notice. Another one, because you said you had a guy come on and talk about Georgia tax credits.
Yeah.
A lot of people were doing this HEART program where they donated money to rural hospitals and in lieu of paying Georgia Department of Revenue. So you apply for a credit, they accept your credit, and then you can donate to a rural hospital in their program, and that credits against your Georgia income tax, right? So it's great. You're making a charitable donation, but it also takes away the amount of Georgia tax that you owe. So the thought behind that was, well, since we're limiting a $10,000 state and local tax, maybe you can count that as a charitable donation, right? So you get the benefit of paying all those taxes. It reduces your Georgia tax. Does that make sense?
It does make sense, yeah.
So the IRS said, no. We're not going to let people do that. And so it's kind of still up in the air, but there were some regulations, I think, that were coming out were basically saying if you participate in some kind of state program and you get a credit for it, that you won't be able to use that as a charitable donation too. Like, you can't double dip to go around the 10% cap.
Yeah,
I mean, the
it starts to
cap.
look a lot like a tax shelter.
Right. It seems like it's a lot of planning. And so I was at the Georgia Bar Liaison meeting at the Georgia Department of Revenue, and their thing was, we've been doing these programs for years before this new tax law. They've had the HEART program. They've also had like a school credit program where you could apply for school, donate to schools, and in lieu of paying your Georgia taxes. And all those programs were around before. So their argument is we didn't create these programs to avoid that 10% cap, but now the IRS is saying, well, we don't want people getting the benefit of that. So I don't know that that is officially decided, but that would be a risky. It's looking like you're not going to be able to do that. And at first, that was a big seller. So that's just something to be aware of. But the great thing about Georgia, other changes they've made is they're lowering their tax rate. So Georgia tax is normally 6%, and they're going to take that down to 5.75 in 2019. So, I mean, it's a small change.
Yeah, well, if you make a lot of money, it can be a significant change.
It can be a significant change. And in 2020, subject, I think, to approval, I don't know that this code has been approved or the change has been approved. It may be going down to 5.5 in 2020.
Oh, okay. So it's dropping.
Yeah, half a percent. It's not terrible. And then, the standard deductions are $4,600 for head of household, $3,000 for married filing separately, and $6,000 for married filing jointly. So there's some good things about the Georgia tax law that's going to help people. But again, everything with taxes is so personal, right? We can't give you a blanket statement and say, well, because the tax law has changed, everyone's going to win in Georgia or the IRS. It depends on where you live. It depends on how you make your money, whether you're W-2 or 1099 or you own your own business, whether you have a home, whether you have children. All of these things factor into whether or not you're going to owe tax or get a refund. And so I think it's always really important to have these conversations with a person that knows what they're doing. It makes me so nervous when I hear like, oh, I went to my friend's friend and she did my taxes. I'm like, oh, are they a CPA? Are they an accountant? No, they do returns.
Now, does it make you nervous? I do my own returns every year.
It doesn't make me nervous if people do their own returns and they're pretty basic returns, right? But or you have an education.
My returns aren't basic.
But an education in tax, I mean, you do know the law.
I have some tax background.
Pretty well. There are people that have a tax background.
But I don't know this new tax code. I mean, we've actually gone outside of my realm now.
Well, people that could use software and have them guided and make the right choices.
You're hiding this because you're a little nervous for me. I'm a little nervous with the new tax code. I'm just like, well, I haven't. I'm so used to the old tax code. I kind of knew the ins and outs of it.
No, I think it's fine when people prepare their own returns. People just have to be really careful because I defend a lot of audits, and a lot of people do their return on H&R Block or TurboTax, which is fine. They say, well, the software said it was fine. And so the information going into the software.
I noticed that in TurboTax they don't have the audit thing anymore, where it says you're not likely for an audit or whatever. They used to have this they used to have this odometer that was like not an odometer, but kind of a meter that said this, whether you're likely or not likely for an audit, and they don't have that anymore.
Yeah, so
or maybe that's just me.
It just makes me. Well, I have to explain to people. It doesn't make me nervous. If people want to do their own returns, that's fine. But be very careful about the information that you put into the system, because if bad information goes in, bad information comes out. They're like, well, I had the 100% audit guarantee, and I'm sure H&R Block or TurboTax will be like, well, you put bad information in, we don't defend against that, and that's normally the response. So just take your time. If you are going to do it yourself, make sure you read everything. IRS.gov to me is one of the greatest websites. They really try very hard to put everything online. Everything's accessible. If you don't know something, you can very easily look it up. So if you don't know if you qualify for a program or a credit or a deduction, you can normally find all of that stuff on irs.gov by just doing a quick search.
Okay, so we're up against yet another hard break. Alyssa, why don't you give them some contact information for you and your law firm once again?
Yes. So you can reach me via my website at www.atltaxlawyers.com. We also have some articles and blogs about these types of issues if you're interested in reading via phone, 404-551-5838, or shoot me an email directly at alyssa@whatleytaxlaw.com.
You're listening to Lewis on the Law. My name is James Lewis, and I come to you each and every single week to empower you, the listener. If you'd like to check out any of my old shows, you can see them archived on my old website, or on my present website, jameslewislegal.com. You can go there. I have a video blog page. I have a podcast page. And soon I'll have a blog page by itself. There's so many blogs these days. I can't keep track anymore. Anyways, we're up against it. When we get back, we're going to talk about compliance for individuals and some personal income tax issues. You're listening to Lewis on the Law. You're listening to Lewis on the Law. My name is James Lewis, and I have yet another fun and exciting show for you. That's right. Tax law can be exciting. The law can be exciting. Alyssa, tell them tax law can be exciting, right?
It can be exciting. It can be exciting when it changes and it saves the amount of tax that you're going to pay.
Yeah, and it can help you in the long run. You can make money or not make money, but get some of your money back. All kinds of things, like let them take a little bit less of your money. Who knows? I'm saying the same thing twice different ways. Attorneys are good at that. I have an awesome show going for you. We are talking the new federal tax law. I have a tax attorney, Alyssa Maloof Whatley, on with me. And when we went through a lot, Alyssa, a whole bunch. People can get this glassy-eyed 1,000-meter stare going through all of this. So why don't we just kind of wrap up where we've been? What are the changes that people really need to be aware of?
Yeah, so the big ones are obviously the brackets changed, right? So they're allowing more money before you move up to the next bracket. There's fewer brackets. The highest rate is only 37%, which isn't that bad. They doubled the standard deduction, right? So that's a great thing.
Woohoo!
Woohoo! Itemized deductions. There's some that are missing. For example, the personal miscellaneous deduction at 2% is gone, and there's a cap on $10,000 of state and local taxes. There's also a cap on mortgage interest. So it used to be $1 million. I think they changed the cap on that to a lower amount, which again will affect people in high income states or costly real estate, states with high real estate. Let's see. No personal exemptions, right? So those are gone, but we add money on the child tax credit. We take that up to $2,000 instead of $1,000. Most importantly, self-employed people that have pass-through entities will get a 20% QBI deduction unless they're in a service industry, at which point there may be a threshold, and that deduction will phase out. And corporate rates are down to a flat 21%. So I think that's kind of just the highlights of the new tax law.
Wait a minute. Before we get into the tax compliance, I think during our break we were talking about something really interesting. How do people get in trouble here? What are the type of things that people need to be aware of? I think you're talking about two instances where people really get in trouble with tax withholdings.
There's normally two ways that people kind of fail with taxes. And the first way is like if you're a W-2 employee, right? You work a regular job, you get a paycheck, and your employer takes out taxes. The first mistake people make is they have the wrong withholdings, right? So let's say you're married filing jointly, and so you claim, on your exemption form, on your W-4, you put married, and you claim 2, right? That's normally fine, but if you're both employed and you're both pretty high income earners, claiming 2, each of you claiming 2, that's not going to be the correct withholdings. You'd actually be at married withholding at a higher single rate at 1 or 0. And so that can create a problem because you're not having enough withholdings. That's not as much of a problem as people putting a number that maybe they shouldn't put. So, example, if I have a single person and they claim 10 exemptions, but they don't have 10 dependents.
10 exemptions?
Oh, yeah. And they have very little withholdings. I've had people say, well, I claim exempt. You're not exempt, okay? If you're
unless you're a student, right?
Right. In certain situations, yes, you can claim exempt, but in most cases, you will not be exempt. So claiming exempt, what happens is over the year, you don't have any withholdings withheld. And so when you go to file your taxes, you're going to owe a bunch because you didn't pay into it, right? And so my thing to my clients is if you make sure your withholdings are correct, and you can check that at, again, irs.gov.
Your favorite website.
I seem so lame. At the withholding calculator, it's one of my favorite things. If you're a W-2 employee, it's a great calculator. It will tell you exactly what your withholding should be down to get you within $25 of them owing you or you owing them. And that's how it should be, right? So use that if you're not sure what your withholding should be. Now, that's one instance. We got people that are employees. The other instance, my big offenders, my people that owe millions of dollars, are self-employed individuals, right? And the reason they get into trouble is because they don't have any withholdings taken out. They are the employee and the employer, right? Because they're self-employed. And so what they're supposed to be doing is they get 1099s or K-1 income. And what they really should be doing is making estimated tax payments throughout the year, right? So that money is in the system when they go to file their tax returns. But what a lot of them end up doing is they spend all the money, and then when it comes time to file taxes, I don't have any money left over for taxes. So what I tell my business clients is when you take money out, you take a distribution, anything, you normally at least want to set aside at least 30%, right? Because you got to pay Georgia 6 and the government 25. That's not even enough, really.
Or they could even do the quarterly self-employment taxes.
Right. But you can actually pay it more than quarterly. So some people struggle with a quarterly because it's so large, right? So like if you have a client that is making a lot of money, they say, oh, I don't know, I can't pay a $14,000 estimated tax payment. That seems very stressful. Or I can't pay a $12,000 estimated tax payment. I say, great, okay, can we pay $4,000 a month? It breaks it down into a smaller amount, and it makes it easier to do. And so they can do it monthly. They can do it as many times as they like. The minimum is 4. So anytime they pull up money, they can put it in a savings account and then immediately make an estimated tax payment on irs.gov direct pay. And that's a great thing because then it's not building up. It's when you get to the end of the year and maybe you owe $60,000, you don't have any deposits. Then people struggle.
I think what you just said is pretty important. I mean, I think because I actually run into people with this problem a lot. People who are self-employed, the quarterly tax payments are a little onerous.
It's burdensome and hard to do.
So where do they go when they want to pay monthly on that?
Yeah, so the IRS has a website, irs.gov. There's a link called Direct Pay, and you can go through the steps. So basically, you pick estimated tax payment. It will go through an authentication process. You type in how much you want to pay, and you'll get a confirmation, and it will be posted to your account in 7 to 10 business days.
Now, I think that is a very important thing that you just highlighted because I think a lot of people don't know that.
Yeah, and I think, and it's kind of like with the withholding thing. When people under withhold, they're like, well, I couldn't afford to have any more taxes. But a lot of times, it's so small. It might be $50 a check that they should have withheld. And if you had $50 a check 24 times, you wouldn't notice that as much as when you have to pay thousands of dollars at the end of the year, right? That's really hard. Or you might not notice $5 or $10 or, when it's broken up and it seems less onerous and it makes it easier to do. So using the withholding calculator is a great way to get the withholdings correct. If you're self-employed, having that mindset that if I take money out, I have to set aside 30%, and I'm just going to put it over here, and then I'm going to pay part of it, to the IRS and part of it to Georgia. It makes it a lot easier if you break it down that way, and then you won't run into trouble.
Makes sense. Okay, so are there some tax compliance issues that we should touch on here for individuals?
Yeah, so we kind of talked about adjusting withholdings using the paycheck calculator. That's a great thing. You can play around with that. Making the estimated tax payments online, that's a great thing. Filing on time, this is the hard. Like people,
I think we should get a little break. I mean, the government can't get their act together. Why do we have to have our act together?
Right, you still gotta file on time.
Doesn't work that way, huh?
Unless, I could see if it extended, like they weren't accepting electronic returns, and it continued to a point where they weren't able to process them or something. I could see them like changing the deadline. If they weren't going to open it up. But if they're opening it up and accepting electronic filings, I don't think they're going to change the due date. But people always have a hard time with the filing on time. And my thing is, if you file on time, you're saving, even if you can't pay. Like, let's say you owe money. People are like, oh, I owe money, I'm just not going to file. Well, that's not going to really help anything because all your income is being reported to the IRS anyways, unless you're self-employed. Like through an entity, like if you're 1099, that's also being reported. So that doesn't really help anything because the penalty for filing late is actually more than the failure to pay penalty, right? So you're kind of like shooting yourself in the foot by filing late. At least file on time, and then you can set up a payment plan, but you won't get the late filing penalty, which is actually more. So it's always better to file on time. And then people always get the extension confused. They said, I don't understand why they're saying the money was due on April 15th because I filed an extension. So the extension and the IRS agents, they always say the extension is to file, not to pay. So the money is due in April, whether or not you file an extension, right? So always make sure you pay in full by April 15th if you can. Using these tax compliance tips and working with an accountant or CPA, you want to make sure you get it just right because you really don't want a huge refund. You want to be using that money throughout the year. You don't want to be giving the government an interest-free loan. So when I hear people say, oh, I'm getting a huge refund, I'm like, well, that's not actually good financial policy. Like, it's not a good financial thing to do because you could have been using that money. You could have been investing that money. And you're just giving it out for free. Are they going to pay you interest? They're definitely not.
No.
Right? So you want to try to get it almost exactly right. You don't want to owe tax, but you also don't want to get very large refunds.
Okay, you know what? I think that's about all the time we have for this week. Alyssa, why don't you one more time give them some contact information for you?
Yep, I'm happy to. Feel free to visit my website if you have any questions about these kind of issues or you want to read some articles. www.atltaxlawyers.com. You can give me a call at 404-551-5838 or shoot me an email directly at Alyssa@WhatleyTaxLaw.com.
You're listening to Lewis on the Law. I have had a great show. Thanks, Alyssa, for being on with me. I would like to thank the people who actually bring this thing to life. The magic man over there, Sam Davis, he's at the controls. The wizard of video over there, Anthony Cook, he's making this whole thing come to life. Thank you guys for being here, for being you, and for doing all that you do. I've got another great show coming for you next week. We're going to talk about guardianship and mediation in the family law process. You're listening to Lewis on the Law.